Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute for September 3rd, 2013. Hope you all enjoyed the long Labor Day weekend holiday and had a better time than the markets did last week, or last month for that matter. They were down over both periods and taking a 3% hit on the month. That really isn't very much, but it was the worst in a couple of years, which probably says something about the slightly bubblicious nature of this market. It's risen steadily on the back of 2% GDP growth and little to no earnings growth. But last week, reality intervened in the form of the Syrian situation and fears that the U.S. would take military action. So as we go back to work and the cruel realization that summer is almost over, there are some things to cheer about if you're long the market. To begin with, the attack on Syria has been postponed, possibly until the U.S. Congress agrees to share the blame for anything going wrong, or as the president put it, gives its consent. Global markets began to rally right away on the president's call for inaction. In the second place, although September is historically the weakest month of the year for the stock market, we're entering the month well oversold on a short-term basis. That could add fuel to any Syrian relief rally. Then there are the PMI, or Purchasing Manager Index surveys. The global ones are conducted by Market Economics, that's market with an I instead of an E, and both market and the business press have been heavily promoting recent results as essentially delivering the promised land. I think you should take this kind of stuff with a heavy dose of skepticism for a couple of reasons, although it is reasonable to expect a short-term psychological boost to the market. The PMI surveys are what's called diffusion surveys and are really most useful for looking at trends over many months. They aren't very good gauges of actual levels of activity, especially in real time. For example, the US PMI in July was the highest rating in 2 years, leading to the usual raves in the media about the fastest rates of manufacturing expansion. But industrial production in July ended up showing zero growth, and shipments and new orders of durable goods were negative almost across the board. Not like everyone else, the purveyors of this stuff are trying to make a living, and the better the stock market does, perhaps the better their sales go, especially if they can be seen to have predicted it, and who knows, maybe the economy really will get better. I don't mean to say that it won't. Just beware of the extra enthusiasm when reading about strong manufacturing growth. The surveys do not measure output or production, regardless of what junior editors might be writing up in their little headlines. Ultimately, September's fate will most likely be decided by the Federal Reserve's next meeting in 2 weeks' time. Many have already been assuming the worst, but there are convincing arguments out there for differing outcomes, and this Friday's jobs report could very likely be the swing factor. So while I look for some short-term bounce, I'm not going to get too excited about anything until the Fed has spoken and the Syrian situation is behind us. I'm Kevin Flynn, and thanks for listening to another edition of Avalon's Market Minute.